And once it got there, we done what needs to be done. Sell that baby.
Welcome to GroundUp Capital's weekly market analysis. I'm your virtual host, here to navigate you through the dynamic world of finance. Join our team of expert analysts led by Prof. Zones as we delve into virtual fund management and technical market analysis, providing you with insightful recaps of the week's market movements. From chart breakdowns to guest appearances by industry professionals, we are here to equip you with the knowledge you need to make informed decisions. And if you're craving more analysis or seeking daily recaps and signals on currency pairs, don't hesitate to reach out to Prof. Zones directly at groundupcapitals@gmail.com or connect with us on Instagram or Facebook. Stay ahead of the curve with GroundUp Capital, like, subscribe, and hit the notification bell for all the latest updates. Happy trading!
Hey, what's good, everybody? It's your man, Prof. Zones, and Prof is not for professor, but for profits. Yiboo. Oh, yiboo. Oh, yeah, guys. As you can tell, guys, this is the third episode of GroundUp Breakdown. This is the third episode. And from the first episode, we have called the charts the way we need to call the charts. I don't think you understand. First episode, we called it. Second episode, we called it. Now, third episode, we called it. But guys, if you literally been following the GroundUp breakdowns, right? The reason why I've just been focusing on AudUsd is I want you guys to see that we are not playing games here. We are not gambling. We know what we are doing. I myself was Prof. Zones, founder and CEO of GroundUp Capital. Guys, this is very deep. Without any further ado, let's just get into it, right? So, what did we say about this AudUsd? Simple. This is the level we were looking to tap into, right? And when we refine it on the M30, let's go to the H4, in fact. See this whole order block right here? Not order block, I mean this buy side imbalance, sell side inefficiency. This is what we wanted to tap into. And when we refined it to our 30-minute time frame, right? The time frame right before our end, right before our entry time frame. When we refined it, it looked something like this. So now, can you see that the market violated that FVG very clearly? Very, very clearly. And where do we come from? Guys, where do we come from? This is Monday. This is Monday. This is Tuesday. This is Wednesday. This is Thursday. And this is Friday. Why I'm showing you that is because we did say that we are very much bearish, and all we were looking for when we came to the M15 time frame, all we were looking for is for price to come and fill this imbalance. But let's zoom out. Would you look at this, right? It never came to fill that imbalance. But what else were we looking for? We were looking for this low right here to be violated. Why? So that can prove our change of character. This is a major low, not a minor low like this one, right? So this one we already had last week Friday, on Friday's close. So I knew that this one would hold a bit, but it's minor. We needed a major break of structure. And guess what happened? When the major break of structure happened, you know what I started to look for? Sells. I started to look for sells. Where, you might ask? Simple. There is a supply zone right here that is also carried on by this sell side imbalance and buy side inefficiency. It's very small, but nonetheless it's there. And it validated this supply zone. Those that are in my mentorship know this. And okay, I didn't post it on my feed, but I posted it on my story. This was CPI, guys. This was CPI. So all I was looking for CPI is for this liquidity to be cleared. That's it, guys. That's all I was looking for on CPI, is for this liquidity to be cleared. And guess what happened in CPI? The market shot all the way down. As you can see, this huge wick. The market shot all the way down, like about 25 pips, and then rejected to where? To our point of interest, our supply zone. And once it got there, we done what needed to be done. Sell that baby. Because we know at worst, we're going to hit stop loss above our supply zone, which we had a simple 10 pips stop loss above our supply zone, right? If we hit stop loss, but we didn't. So guess what? We hit our 1:3 very nicely. Boom, right there. And the market just, within 30 minutes, guys, we were done on CPI. And I called this before. I called it on the weekly and I called it on the CPI, right? It was CPI. Yes, it was CPI, not NFP. NFP was the previous week. But yeah, guys, what I'm trying to say here is if you're not tuned into these GroundUp breakdown episodes, you're missing out on a lot. You're missing out on a lot of money, guys. You're missing out on a lot of money, guys. As we keep going, don't worry. Investor passwords will be shared. It's just that we need to build up to it. So you guys can see, I can't just share an investor password and I'm just arriving in this YouTube scene in terms of weekly analysis and market recaps, right? So I need to build that report with you guys, that rapid report, however way you want to say it, so that you can understand that Prof Zones is not playing games here, not playing with you guys, not playing with the market. The market plays with us. So our job is to play with it, play with the market. Simple. Because the big boys are playing with us. The smart monies are playing with us. So all we need to do is be on their side and piggyback all the way to our piggy bank. But yeah, guys, simple as that, right? That's all we were looking for. And when that played out on CPI, guess what it did? It created more break-off structures after our initial change of character. So what were we looking for then? We were looking for another sell. Now let's move to our M5. This is the last example I'm going to make, right? Can you see that on the M5, we have this beautiful supply zone. Very beautiful supply zone, led by followed by a very beautiful imbalance. So it verifies our supply zone. And all we wanted to see in our supply zone is a change of character. And when we tapped in, of course, above the 50%, when we tapped into our supply zone, I started to move to the 1 minute time frame. Why? Simply because the market was very much volatile. And on the 5 minute, I couldn't see the break of structure very nicely. And over here, all I wanted to see was a break of this low right here. And after the break of that low, I already knew that we will go to the downside. And if the market doesn't push back up, all the way up to this supply zone, guess what? We have our secondary supply zone. But the market needed to break this low. And after it broke that low, guess what it left for us? It left a very, very, very clear supply zone right here. A very clear supply zone. Why weren't we looking at the ones above now? Because there's no imbalances leading up to it. Can you see that this supply zone has an imbalance to it? And right after the market tapped that imbalance, it created another supply zone, which confirmed to us that we are now going down. And we took ourselves with a nice 10 pip stop loss, which was all the way up there. Let's move back to the M15. Which was all the way up there. Just to be safe. And guess what? We hit our 1:3 very nicely, but it was the next day. Very nicely. In fact, I started to kind of regret why I didn't hold it till the next liquidity, which was right here. Because the whole week has been slow, guys. I'm not sure if you noticed, but the whole week has been very much slow. So yeah, with that said, that's what happened. And I already knew that we attracted to what? This fair value gap right here. This buy-side inefficiency, buy-side imbalance, sell-side inefficiency. I already knew that because that was what? Our last week's analysis. Now, enough about that. As you can see, everything played out the way it's supposed to play out. Now, let me just give you a brief analysis for this coming week. Now, let's go back to our H4 time frame. Guys, can you see that we have a rally, base rally, that is possibly about to form? Why? Because right here, we broke structure. Right? We broke structure. And not just this structure that we broke, but guess what? Let me zoom out. This whole supply zone here. So I can easily use that one instead of this one. This is minor and this is major. Why? Let us look into here. This was heavy accumulation. Heavy accumulation. And then what? Manipulation to the downside. And then what? Distribution, where we tapped into this order block. And with this distribution, we have what? Rally, base, rally. Can you see what I'm seeing, guys? So now with that said, let us move to a higher time frame, like the daily, so that you guys can see exactly what I'm looking at. Can you tell that this order block right here, this fair value right here, has been tapped? So there's a lot of reasons for the market to reject and push all the way up into this order block right here before it pushes down to fill this fair value gap completely, right? There's a lot of chances for that to happen. But, let's move back to our H4. 50% of this fair value hasn't been filled. So it's been enticing sellers. So it has a lot of chances for it to want to come back into this 50% of this fair value right there. And then, so these are the possibilities. So since it's been enticing sellers, they might want to take all those sellers' stop losses above here. Take stop loss, and then as soon as it hits the 50%, give us a what? Another change of character. If it does, then we already know that we're going down to fill this 50% before we officially go up. Right? So that's what we're looking for into next week. But if that doesn't happen, then since we are here, we're going to directly push down to fill this 50% and then look for a change of character. Liquidity sweeps into this fair value gap. And if that happens, then we definitely know that overall will probably be bearish for the rest of this month, if that happens. Why am I saying that, guys? Why am I saying that? Simply because on the weekly time frame, if that happens, that will mean that the weekly time frame wants to come back into this zone right here, this demand zone right here. And when we refine that on the daily, it looks something like, sorry about that. It looks something like this. Percent of that zone. There we go. Then we know that's the zone it'll want to go to for us to then officially buy. Right? But then we'll still need confirmation of some change of character, some market structure shifts. But with that said, guys, that is all we're looking for next week. Let me move all the way down to our 15-minute. As you can see, we got a slight change of character here. It's not strong because it didn't close above this zone. So we can easily say that this was a liquidity sweep to the downside. This was a liquidity sweep right here. But it didn't confirm the change of character. So that's what makes us a little skeptical about it pushing to the upside as yet. Because it confirmed the liquidity sweep, but it didn't really confirm the change of character. If it closed above this zone, if it closed above that zone, then we would have knew exactly that the market is just coming back here and then it's going to push all the way up. You see? All right, yeah. So you see, guys, so that's what we're looking for. That's all that we're looking for this coming week, is for price to either confirm this change of character above this high, right? So that we know that it's probably going to leave an imbalance somewhere in here. To confirm that, then it comes back, maybe London session, our kill zone, and then it shoots all the way up into this fair value, 50% of that fair value, or the market will just want to keep pushing down to break this liquidity again, to sweep this liquidity again, and then sweep into the 50% of this, and then create a change of character, right? So those are the two things we're looking for. But overall, guys, we already know that there is an ultimate direction of buys. Why are we saying ultimate direction of buys? Let's go back to the weekly. Can you see that ever since we slightly tagged these buy stops, we haven't formed significant lower lows and broke this sell side liquidity and liquidated this sell side liquidity. We've just been forming lower lows within this range, right? That's all we've been doing. So we can't confirm that we are officially in a downtrend as yet. So we still have chances to push up. And when we go all the way to the monthly time frame, let's just let it load. As we go to the monthly time frame, we can tell that we failed to break this low of May 2022 and this low of 2023. We failed to do that. So what is that telling us? Since we failed to do that, and look at the momentum of this monthly candle, the way it pushed up. Buyers want to get in. They really want to get in. So if they are given a chance to get in, trust me, they will get in. And we still have about 10 days of market data till the month ends. So it's either in this 10 days, the market will want to push all the way up and break this wick over here, or push all the way down into this imbalance. But either way, we're still looking very much bullish. Because if we look at it on the line chart, it's easier to see that we had a break of structure, a change of character, and we had a break of structure with this, which was this liquidity sweep. Right? Or you can look at it as we had this liquidity sweep right here. And now we had this minor change of character in this zone. And we're about to head for this official change of character. So yeah, guys, without talking too much, that is basically it for next week. So yeah, guys, just keep your eyes peeled, and I hope you guys have another profitable week. And let's make money. Let's be on the side of smart money. Let's be on the side of all these big interbanks, and let's piggyback off of them since they piggyback off of us. With that said, guys, this shit man, Prof Zones, and Prof is not for professor, but for profits.